All right. Well, we'll give everybody about 30 seconds, maybe a minute more to step into here. If you have any questions that may come up beforehand or during the course of the webinar, feel free to put them into the box on the right. But just wanted to give everybody just a minute more and then we'll start. All right, well, everybody that's in here should be in here. If they aren't, they're missing out. I want to welcome you to a webinar called Solar Tax Incentives. I am Tim Cole from SimpleArray. This is Frank Zapanzik, CPA, much smarter than all the rest of us, I believe. But I want to kind of go talk through the webinar, and then at the end we'll have a little bit of Q&A session as well. In the webinar, we're going to talk about federal tax credit that applies to solar, depreciation that's available with solar, some additional info, and then some state-specific incentives. As far as your federal investment tax credit, when you install a solar array, there's a 30% tax credit of the cost of that array that's available to the purchaser of that solar array. This applies to both a residential and a commercially installed system as it's put in by a commercial entity. The beautiful part about this is that 30% tax credit can be rolled forward up to 20 years and can also be rolled back, right, Frank?
That's correct.
Yeah. So if you were to put that in, we would be able to reach back into 2017 taxes and put that in there.
And so just to clarify, that means that, if you don't have the income to actually use the credit in the current year, that's where you can use the provisions of actually rolling it back or rolling it forward if you have taxable income in any of those years, 1 year back or 20 years forward, so that you can actually get the benefits of that credit. And, just in case you actually go to purchase that system in a year where you don't actually have any taxable income and you don't actually get that benefit.
There are a couple sunset provisions on those tax credits. Like all good things, they don't last forever. And not to sound like a used car salesman, but we've got to look at these tax credits as they fall through year 2019. You can see from the screen they do lower down at 2020, 2021, and 2022. Pretty sizable jump if the solar array is not installed before the end of 2019 to 2022. So we don't have any fancy balloons and streamers to say buy now, but we're saying buy now, because that's 20% of, on a larger array, that can be a pretty sizable dollar amount for a federal tax credit. There's also depreciation that comes with these, and this is kind of the quiet, unknown advantage to purchasing solar. It's available to commercial properties and farms. When you've got that taxable income, this lowers that, so that you've got the ability within your federal and your state to have depreciation on your solar array. Anything you want to say there, Frank?
No, just to kind of do a little versus credit versus deduction here. The depreciation would actually be a deduction that would be able to subtract any taxable income that you might have, whereas of the credit that we spoke of earlier is actually a dollar for dollar reduction in the amount of tax you would actually owe. I just wanted to point that out.
Please.
I can touch on this as well. Please. So the good news for a lot of taxpayers, and depending on whether or not you're using this for business or not, is that in the case of things that are kind of affixed to your roof, where a lot of these solar panels would be, there's that fear that you wouldn't be able to deduct it over a 5-year maker's depreciation. It would be more of a 39-year, similar to the length of time that you would depreciate a building. And since This could be considered a structural component of a building. Can you take it over 5 years, or does it have to be over 39? And there's been a lot of rulings out there that have said that, you can, in fact, use this as a 5-year property, that it is equipment, it's doing a purpose, and just because it's affixed to roof doesn't necessarily consider a structural component. So you can depreciate it over 5 years. So in this example, we've got a $100,000 system at a 35% tax rate. So you can see in year one, with the depreciation, the first year depreciation in a Makers is 20% of the purchase price. And so I know you're looking at it going, well, $17,000 isn't 20% of 100,000. Why is that? And that's because the rule states that if you take a 30% credit for that, you're essentially getting $30,000 credit for this. You have to reduce your basis that you start with by half of that credit. So essentially our basis that we're starting with here is $85,000. And if you take 20% times the $85,000, you'll get your $17,000 deduction amount that we see there in year one. And then times the 35% tax rate, your benefit would be $5,950, and on and on and on. And so, and on top of all this, the solar panel system could actually qualify to be bonus depreciation under the Tax Cuts and Jobs Act in 2017. And so that bonus depreciation used to be 50% of the purchase price. So you take this example, $85,000 cut in half could be your first year depreciation on that. Going forward, the Tax Cuts and Jobs Act actually increase that 50% to 100%. So there's a potential there to almost write almost the entire amount off in the first year. But that's something I would advise anybody to talk to their CPA about before actually making a decision like that, just to see what kind of benefits it might help you in the current year, or any benefits that extending it out over a 5-year period could actually do for you.
So Frank, let me ask you, since you're a CPA and much smarter when you tax things than me, why would someone want to use a 5-year depreciation instead of the standard depreciation? What's the benefit to them in using that?
I'm not sure what you mean by standard depreciation. The
39 years you were talking about.
Oh, well, it just accelerates the benefit that you get. So, I mean, you take over 39 years, I mean, you could do the math. You'd only get, let's say $2,000 to $3,000 of a deduction, and a tax benefit would only be, roughly $1,000 or so. You accelerate that depreciation over 5 years, and you get a lot more benefit, a lot more money back early on, and cash is key in some businesses. So being able to have that capital, you'd be able to invest in other things more sooner than if you were to take a longer life.
Return on investment would be much faster, and the system would pay itself off much quicker, so that then the free energy being created by solar is truly free energy and doesn't go back against the cost of the system.
Absolutely.
Okay. A little bit of additional information as far as some of that federal tax credit and the depreciation goes. Commercial entity ownership is required. And I know that some of those words can get a little bit confusing, but essentially you're buying this as a business, be it a sole proprietorship or an LLC or an incorporated S Corp or C Corp business, then you're able to utilize those federal tax credits as well as the depreciation. Also, if you've got some necessary electrical upgrades that need to be done in the building in order to install the solar, those can be included for the tax credits. So if you know that, let's say you've got a meter that isn't bidirectional and it doesn't have the opportunity to send solar generated power back into the system, that needs to be updated. That's something that can be included in this, but then you're able to achieve that 30% tax credit for the electrical upgrade as well as the solar array. State incentives, and Simple Rate does work in multiple different states. We are in Peoria, Illinois, and we're very familiar with the Illinois state incentives. Iowa has a 15% tax credit. Illinois has the adjustable block program at the moment. I know that you've seen a previous webinar with Lewis Butler that's been done about that adjustable block program. If you haven't, go back and watch it. Get your popcorn, it's a good time. But it really explains how that Illinois Power Agency provides those cash payments back for purchasing solar. You're actually getting paid to put in solar. And that's really a good opportunity to talk about cash payments. Any questions as far as questions you might have with Frank? I know we've got a couple that have come through. Got one here. Do you have any information on property tax or commercial solar plant installations? Are there any exemptions, and how is the property typically assessed?
You know, I don't have a perfect answer for answering that, I guess. I know that a lot of states differ, and I'm not sure, maybe I'm not answering the question that you want, but a lot of states do differ on their stance on, you know, what is this going to do to my property tax? And a lot of states have said, you know, we will exempt this improvement or what have you, this upgrade to your property, and you'll be exempt from paying any additional property tax on that.
Yeah, I know that property taxes, they do vary state by state. They do vary county by county. And so some of those things, you may live in a much more rural county that doesn't quite have as aggressive of approach as, say, your urban environment. And so they may not have even thought to address this yet. But they do vary by state, by county by county. I had a question about do roof repairs or structural upgrades, are they eligible for the depreciation? And no, unfortunately, they are not. The electrical upgrades that would be required as part of the solar, those are the ones that are going to be included. In the commercial area, those roof repairs and the structural upgrades, you can't add on another 5,000 square feet and have that be used as a tax credit, unfortunately. What is the final year of the federal tax credit? That's a good question. 2022 is where that sunsetting goes down to.
And I believe, I don't quote me on this, but I believe that the Federal Tax Cuts and Jobs Act extended the credit at least out to 2023, and that goes for a lot of other business credits as well. But again, I'm not sure on that.
Okay. And Dave asked, how about the depreciation on a rental property that isn't a corporation?
So rental properties work a little different. Depreciation can, most depreciation is the same on them. However, the provisions for bonus depreciation, Section 179, all that can differ a little bit from than someone who has ordinary income of another type, I guess. Hopefully that answers that question.
If that doesn't, please feel free to reach out to us by email as well, bbright@simpleray.com. We'd love to have the opportunity to drill in specifically with some of your site-specific questions too. There's another one here. Is there a cap of how much federal tax credit is worth? Is there a cap to how much the federal tax credit is worth? No, there's no cap on that. You've got the opportunity for a $10,000 system or a $10 million system. And that's where that 30% tax credit can be pretty sizable when you start looking at putting into a larger commercial facility.
And that's where the carry forward provisions help too, because if you don't have enough taxable income to actually get the benefit from that full system, you can carry it forward and keep carrying it forward until you're actually able to use and get the benefit from it.
If it's a commercial project, can a customer depreciate everything in the year one instead of 5 years through makers?
It's very possible. So, I mean, with the Internal Revenue Code, everybody has to understand that there's exceptions to exceptions, and there's even exceptions to the exceptions of the exceptions. I mean, it's something I'd advise you to contact your CPA to see. But yes, in 5-year property, depending on if you meet certain things such as purchased in the current year, or you know, maybe it's not used or not purchased from a related party. You know, I could go on for a couple of minutes on some of the exceptions.
No, we want to keep everybody awake.
Sure. Yeah, I get sleepy just talking about it myself. But no, but yes, you could essentially take the entire remaining basis in the first year, depending on some circumstances.
Got another question here. Are you required to pay for the free energy from your corporation since you are getting a value from your solar system? He's planning on setting up his solar system as a corporation for his personal house.
that might be one for you.
I'm not sure entirely what is being asked here. Are you required to pay for the free energy from your corporation? If it's free energy, you're probably not going to be paying for it, and this might need a little bit more explanation from this. But if you're setting up a solar array on your personal home through the corporation, then the corporation would have the federal tax credits and the depreciation, not the personal taxes, even though it's on the personal home.
Yeah, and I don't know, I kind of take the question maybe that you mean, do you need to actually pay tax on the amount of money you'd be saving? And the answer to that would be no. I'm not sure if that's the question at hand either.
It might, again, I apologize, but maybe reach out through that bebright@simpleray.com to get a little bit more detailed answer. We have some incredibly smart engineers that work with us throughout the world that would be able to drill down specifically to that question. Are you familiar with the smart inverter rebate incentive in Illinois, and to what installation types would it apply? That's not something that I personally have run across, but I would love to reach out and have that, again, through the email of bebright@simpleray.com. I do know that the Illinois Power Agency and the Adjustable Block Program has some pretty hefty incentives, sometimes around 50%, even of the cost of the system specific to Illinois. And that might be tied into that. I'm just not entirely positive. I apologize. Battery systems, are they eligible for tax credits?
I'm not sure exactly.
Those would be the battery systems that we've tied into the cost of the solar array. And I believe that that would all be encompassed under one cost of the solar array. And at that point, then, by purchase with a commercial entity, they would be eligible for that tax credit. That's some of those electrical upgrades that we've talked about too. What if I can't use all the tax credit in 1 year? Can I use it in the next? I think we've answered that. Yeah, that would extend out for 20 years. You could reach back for a year as well.
Yeah, if you do have taxable income in the previous year, you get an immediate benefit. If not all of being able to use in the current.
Are warranties on equipment transferred? Sold my business, and yes, they would be. The beautiful part about Simple Array is that we offer 25-year warranties on our inverters, on the solar panels themselves, on the racking, all of that. So you know that you can do that with a pretty solid base, that you've got a healthy warranty that covers both the labor and the material to replace that. If you do end up selling your business, that's in essence an added physical asset that you're selling. And so you've got not only the physical asset of the array itself, but you've got the warranty that ask your CPA what the value of that warranty would be. But I can imagine that would add value to the actual business itself. What about an LLC that leases buildings where the solar array would be mounted but pays the utility? I'm assuming the building owner would take the depreciation, but could the LLC get any tax benefit?
I'm not sure the assumption would be entirely correct. I mean, it really all depends on what sort of agreement you have with your landlord. But if there's an LLC that's actually incurring the cost of getting these solar panels mounted because it would help them on their utility bill, then again, depending on the agreement, I'm not sure if there'd be any agreement against that, but the LLC owner, the one who actually incurs the cost, would actually get the benefit of that depreciation. It wouldn't necessarily be the landlord. And then should you ever decide to move out of that space, you'd be able to capture any unused benefit that you hadn't.
It would go back to who actually owns the solar array, correct?
I mean, they would continue to get the benefit, I believe, from the decrease in utilities and stuff, but whoever incurs that cost is going to get the tax benefit.
Okay, yeah, that's what I thought. Say you install and collect tax credits in 2019. In 2021, you want to upgrade or expand your existing setup. Is it eligible for tax credits? Yes, it would be, but I believe that would be classified as kind of a new system if it's starting the process over in 2021. So it would fall under that lower tax credit amount.
And it'd fall into some of those sunsetter provisions,
right?
Where your credit would be a lot lower than it would be today.
It looks like that's most of the questions. If there's another question, feel free to put it in quickly. Got one here. Are the costs of import tariffs taxed or just the actual cost of inputs? I'm not sure that we would tax a tariff. I'm not sure I understand that question exactly, but the system is in Illinois at least. It's taxed when it's purchased, it doesn't have sales tax added to the cost of the system. Modules, racking, inverter, yeah, the costs of those are built into the cost of the system. There's not an additional tax on those. Any other questions? We'll wait maybe another 30 seconds. Just wanted to again reiterate, structural repairs, including a roof, it may not be eligible for the solar tax credits or depreciation. Because the tax incentives with solar power can be complex, remember to always check with your handsome CPA and simple rate in regards to your specific situation, even if they're not. Even if they're not. We would love to actually get into the nitty-gritty of your property and how that works. That's the real answer. Some of these are generalizations, I realize, but those are things that we want to do. If a commercial solar operation is organized as an LLC, do the ITC and the depreciation benefits flow through to the partner owners of the venture on their individual returns? That's a good question for you.
It does. So depending on an LLC can be taxed several different ways depending on how you elect to be taxed. But yes, so it would be claimed. I can't remember the form name that the ITC would be claimed on the business return. But yes, then it would essentially. Each owner would get a K1, it would flow through to their Form 1040, and then I believe it's Form 3800 is the business credits, and that's where a lot of those credits would be claimed on the actual individual returns.
And just to back up just a little bit, we talked about the battery upgrades. Yes, those are eligible for the tax credits as well. This one, if a customer puts a new roof on his or her house or rental property, would that roof be eligible for federal, state, and tax credits? I think we've already talked about that. Structural repairs may not be eligible for the solar tax credits. It's just what we're looking at as far as the electrical upgrades for that. Any other questions before we let you all get back to your lunch and stop staring at us? You got any good jokes to tell, Frank?
No. I just, before we close down, wanted to say thanks very much for the opportunity. I enjoyed being here, and hopefully we got everybody's question answered, and hopefully everybody is more the wiser on any investment that they might make in the future.
And if you do have any questions, again, we would love to talk to you, even if it's specific to a CPA. Frank would love the opportunity to reach out and talk to you. We can obviously talk to you through bbright@simpleray.com. We just want to thank everybody for joining us today. The webinar will be available as a recording for you to rewatch at any time. We have appreciated your interest and your questions. Thank you.